Hey guys, you're welcome back to my YouTube channel. You're welcome back to this video. So if you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. So guys, I want to make a very important video on a particular strategy that is very underrated, and if you use it, I guarantee you almost 80 to 90% of win rates. Yes, if you follow the rules and then you follow everything. So stay tuned to the end to get all what I am going to be talking about. So before that, I want to show you guys about the trading view of deriv. I've been getting a lot of questions as to trading view deriv, so I just want to give an explanation about that. So you go to your Google, your Safari, anyone, your Chrome, then you type in tradingview.deriv.com, then you go, you click on go. Then the next thing you would want to do is to change the settings. I make use of phone to make my analysis because it is very easy, convenient and flexible for me. Some of you can make use of your laptop. Whenever I want to make use of my laptop, I also make do with the settings. So this is the same thing you would have to do if you're making use of laptop also. So you just go to your settings, you just go to your settings, you change this to white, you change this to black, you change this to black, you change all of this to black. Then the next thing you go is to your status line. You off all of this so that you can avoid distraction. Then you go to your appearance. In your appearance, your vert grid lines, you change it to white. Your horizontal grid line, you change that also to white. Then if you want to watermark, you click on watermark. If you want to make the color of your watermark to be black, you put it there. If you don't want black, you just put it at the normal color, then you click on okay. And this is how you are going to see it. You're going to see it very clean, neat, and like this. I love it this way because it is clean and it helps me to see my chart properly. You know, trading is a business and you need to treat it as one. So the next thing you would want to do is what? You would start analyzing. Now whatever object you bring out and you don't like the color, just change the color. It's going to just bring out the settings. You can see I changed the color to black, and that is how you do it. So now going into the video I want to make for you guys on this strategy. Now the strategy is what I call the time frame alignment. Yes, now you know we have time frame differences. All time frames are not always the same. Yes, all time frames are often not the same, so you have to know how to align them. Now it simply means for this strategy, it simply means you are waiting for 3 to 4 time frames to align before you move with the market. Yes, you move with the market once these time frames align. So the first thing, as you all know me, is I will start from the higher time frame. Now on this trading view, we don't have weekly time frame, we don't have monthly time frame. The only time frame we have is from the 24 hours time frame, which is the daily time frame. So that is where I am going to be starting from also. So on this daily time frame, it is very obvious that our last break of structure. Now what you are going to be looking out for at the last break of structure on each of the time frames, and that is all. Yes, it is as simple as that. But trust me guys, if you don't have patience, number one, the strategy is going to teach you patience. Then number two, if you don't have a good psychology, this this is going to be like rubbish to you. Yes, because it takes only someone that is patient. It takes only someone that is patient to make use of this strategy. And this particular strategy has about 80 to 90% of win rates. Yes, because you are patient enough. So this is our last break of structure on the daily time frame. We have our last break of structure to the upside on the daily time frame. So here we go guys. So you go to your 4 hours time frame. Now I'm not going to be making use of the 8 hours time frame because it is almost the same with the daily time frame. It is almost same with the daily time frame. So I'm going to be making use of the 4 hours time frame as my next time frame. So after 24 hours time frame, I move directly into my 4 hours time frame. So what's the last BMS? What's the last break of structure on 4 hours time frame? The last break of structure is to the downside on the 4 hours time frame. So see this, guys. We have our last break of structure. Now you can see that 2 time frames are already contradicting each other. Now most often lower time frame moves in the direction of higher time frame. Now when they move in opposite direction, it simply means they are correcting themselves to go to higher time frame POI. So we have our last BMS, right? We have our last BMS to be the downside. We have our last BMS to the downside on 4 hours time frame. You need to write this down also. On the 24 hours time frame, we have our last BMS to the upside. On 4 hours time frame, we have our last BMS to the downside. 2 time frames already contradicted each other. So the next time frame I'm going to go into is 1 hour time frame. I'll go to my 1 hour time frame. So let me see the last BMS on the 1 hour time frame. So my last BMS on the 1 hour time frame is to the downside. See this, guys? This is my last BMS. This is my last BMS on the 1 hour time frame. See this, guys? This is where we had proper test. This was the last place we had proper test. So this is my last BMS on the 1 hour time frame. The reason I'm not going to be marking this place as my BMS is because immediately we had this break, the market only took it out with a week, and market came back to take this high. And obviously we've not tested the sponsored candle of this place. The market used fair value gap to continue to the downside. Now most times market use, sometimes, not most times, sometimes the market uses fair value gap for a continuation. But in this case, market used fair value gap, but after we broke this low, it did not give a valid break. This is more like a liquidity grab. This is more like a liquidity grab of this low. That is the reason the market took this high again. And most times when market does not really break your previous external liquidity, it will come back to break this high. If the market does not break this low, there are possibility it will come back to break this high. And also when market does not break this high, it has probability to come back to break this low. Okay, so we have our last BMS to the downside here on this 1 hour time frame. All other things are actually in between this range. All of these are still in between this range. So this is our last BMS to the downside. So the next thing I would want to do is to go to 15 minutes time frame and also check for my last break of structure on the 15 minutes time frame. I'll look out for my last break of structure on the 15 minutes time frame. So here we have our last BMS to the upside. Now remember, guys, our 24 hours time frame we have to the upside. Our 4 hours time frame we have to the downside. 1 hour to the downside. 15 minutes we have it to the upside. So what's the next thing? Like, what else do you want to do? Now, this strategy is even going to help you as a beginner to know how to analyze. If you are a beginner and you don't even know how to analyze, just start looking for last BMS. Just start looking for last break of structure. Start looking for last break of structure on each of the time frames and you are good to go. So on this 15 minutes time frame, our last break of structure is to the upside. So let's go to the 5 minutes time frame. 5 minutes, okay. 10 minutes and 15 minutes are a little bit closer. Yeah. So on this 5 minutes time frame, we have our BMS to the downside. Here, our last BMS to the downside here. I want to explain to you how you can actually get an entry with this time frame alignment. Now you can see we have last BMS to the downside. Now this BMS we had to the downside, you should be calculating in your head, okay, on our 1 hour time frame. Now even if you don't know about POI, on your 1 hour time frame you have your last BMS to the downside. The market did not really test this place. The market did not really test this place, making this high a weak high. This is a weak high. So you should already be calculating in your head, okay, 1 hour time frame is to the downside, 4 hours time frame is to the downside. That's 2 time frames. 15 minutes is actually to the upside, which is contradictory to the 4 hours and the 1 hour. But here on the 5 minutes, immediately you see that we had this BMS to the downside. You should be calculating in your head that the market is actually ready for a change of character. The market is ready for a change of character. Now, for you to know if this BMS is actually a valid BMS, because some people say sometimes I talk about weak break, sometimes I talk about body break. Now, see this, guys, we have major liquidity. Now, when market takes out your major liquidity, even if it is with a week, if market takes out your major liquidity with a week, it is a break of structure. So see this, guys, we had BMS to the downside, to the upside. This is BMS to the upside, BMS to the downside, BMS to the downside. Market came back to take BMS to the upside again. Can you see this? Are you seeing what I said in my entry confirmation? Are you seeing this, guys? Now see, we came back to break this low. It simply means even if it breaks it with a week, with a week, if it breaks major liquidity, yes, when we break major liquidity with a week, especially when the major liquidity is already at POI, when we take it with a week, it is a break of structure. But when you are not so certain if a particular low or a particular high is a major liquidity, that is when you wait until there is a candle close. Now, the reason I did on this 1 hour time frame, the reason I did not take that, the reason I didn't take this as a BMS is because, guys, this is an external liquidity. This is an external liquidity. It's not major liquidity. The market can take external liquidity and still come back to take inducements. My people know what I'm talking about. Yes, you know what I'm talking about. So, we can come back to take this external liquidity, and market will still use a particular high for inducement. So, this is just a liquidity grab here. And you can see market closed inside this range. Market closed inside, so it is just a liquidity grab, and then we came back to take this high. But on that 5 minutes time frame, checking it on the 5 minutes time frame, you can see that was actually a major low. That was a major low. If you've not watched my entry confirmation, you can go and watch it, guys. See, this is a major low. This is a major low already. Market came back into this POI and then took out this high. Then it came back to take this low. This is a major already. So market came back into this area where we've not tested, and see the drop, guys. See the drop. Now, if you want to make a continuation, where is your last break of structure on this 5 minutes time frame? Your last break of structure is still to the downside. So you wait for market to come back into this range. Wait for market to come back into this range, and then you continue the move. You continue the move. If you are a scalper, you can still go to 1 hour time frame and check your last break of structure on the 1 hour time frame. But I'm going to be stopping on the 5 minutes time frame. So this is the last BMS to the downside. You just wait for market to come inside this range, give you a little confirmation, and then you continue the sell move. You continue the sell move. Now remember what I said. it is about 3 to 4 time frames aligning with each other. So we have our 4 hours time frame to be downtrend, we have our 1 hour time frame to be downtrend, we have our 5 minutes time frame to be downtrend, which is 3 different time frames aligning with each other with your entry confirmation on the 5 minute time frame, and you are good to go. The 15 minutes time frame is actually bullish, but I made a statement earlier. When a time frame is contradictory, when we have a contradictory time frame, it simply mean that we are going into a PO high on the higher time frame. We are going into a PO high on the higher time frame. The reason 15 minutes is actually bullish is because the reason 15 minutes is bullish is because we are going to 1 hour time frame PO high. That was the reason we had our last BMS to the upside. But since 5 minutes has already confirmed us to be bearish, that is our alignment. So we have our 4 hours to be bearish. We have our 1 hour to be bearish. We have the 5 minutes to be bearish. And if you check the 1 minute or so, it will be bearish. And that is about 4 time frames already. So that is just it, guys. And sometimes you can wait. Yes, if you have that patience, if you are really patient, and you don't know about entry confirmation also, although I already made a video on entry confirmation, wait till this 15 minutes align with your 1 hour. Wait till it aligns with your 1 hour, and that is taking off this low. Market's taking this low. When market takes this low, then it simply means your 15 minutes is aligned with 1 hour, is aligned with 4 hours time frame, and then you continue the move when market comes into this range, and then you continue the move. But it is very safe for you that you get your entry confirmation on 5 minutes time frame. And that is it for you guys. So if you enjoyed this video, drop a comment for me in the comment section. If you have a question, also drop for me in the comment section. If you want me to make a video about something, also make a comment, guys. I'm going to see you guys in the next video. Keep living in the atmosphere of profit. Bye, guys.